Yo, what's going on, guys? Welcome back to the channel. My name is Nate the Robber, and I'm going to give you guys a quick stock portfolio update as well as show you the 3 dividend stocks I just bought today. And what's cool about that is 2 of the dividend stocks, so all the stocks I bought pay a dividend, but 2 of the stocks I bought are brand new, meaning I've never previously owned these stocks. And I cannot wait. I'm serious. I cannot wait to share with you guys my thesis behind why I bought these stocks. One of these are going to be probably surprising for you. So I also have this call option on Nike I bought this yesterday, and I'll get into that a little later, but I'm not here to sugarcoat things. I'm not here to waste your time. Let me go ahead and show you the 3 stocks I just bought today. So the first up, we have Nike, Disney, and McDonald's. And I'm going to show you their financials in a little bit. A lot of you are going to be like, why did you buy Disney? That one I cannot wait to share with you guys the most. And I also bought McDonald's. I really love McDonald's stock. Oh, it looks like here on the Robinhood overnight market, McDonald's is rallying. We're actually up 0.89% on McDonald's. And if we look on the past year, it's down 15%. Like I said, I bought this stock today. I also bought Disney stock today. This one, a lot of people avoid. Look at the 5-year chart on this. You'd be down 31%. This company also paid dividends, but then stopped paying dividends, but they just continued their dividends. So they do right now pay a dividend, but check this out. We're up 0.69% on our Disney shares. So I also bought, like I said, 1 share of Nike because I had some leftover buying power. So I bought 1 share of Nike in my Robinhood portfolio, as well as I bought one here in my Moomoo portfolio, which once I buy a stock in here, I'm literally never going to sell it. And that strategy is not working out too great right now. We're down $501. Lifetime profit and loss. But I want to show you, I always like being completely transparent. I want to show you all my losses and I'll show you all my winners too. But check this out. I bought 1 share of Nike actually yesterday at $75. Kind of unfortunate timing, but here's what I want. Here's what I'm hoping about Nike. I'm hoping for a UiPath bottom. So let me show you what the UiPath stock did. So here's was the initial earnings report. They fell like crazy and they kept falling for a couple days. They just kept falling lower, but then they just had a sudden rally. And I guess this is kind of a bad example because today they're down 7%. It's kind of like Starbucks. I feel bad for Starbucks, man. Look, if you bought the dip down here, it was a great dip to buy, up here. It went all the way from 72 all the way up to 82, but now we're back down here. I decided to not buy Starbucks. I decided to pick up McDonald's instead because that one was also, hit that similar 52-week low. I don't know if it's exactly a 52-week low, but I'm really excited about owning this blue chip stock. If we head over here and look at my portfolio visualized, we can see that, look on the left there, we have McDonald's and Disney making up 5% of my entire portfolio. So this is the entire portfolio kind of visualized, if you would. But now I really want to show you the financials of these 2 stocks and why I really bought them. So the first one I'll start with is McDonald's, and I bought them over Starbucks for one reason, and that's because I think the dividend is safer. Check this out. They have a 2.72% dividend yield, nearly a 3% dividend yield. That's really good. And if we look at the PE forward ratio, we have McDonald's trading at a 19.76 forward PE ratio for this, blue chip, worldwide known company. And let's check out their dividend stats. So their dividend cost $1.67. They're actually going to raise it in 2 quarters. They rose it from $1.52 to $1.67. So that was over a 10-cent raise. They've been raising their dividend by 10 cents every single year, which is pretty cool. But remember that their dividend cost them $1.67. And in EPS, they made $2.65. So if you look at EPS, they can easily afford the dividend. And I also like to look at the free cash flow per share. And I like to look at the per share metric because it includes stock-based compensation, or it includes if they buy back stock. It helps their free cash flow per share. But they made $3.31, which double easily covers the dividend. But let's go and visualize this for you. So they made $1.93 billion in the most recent quarter, which was up 7% year over year. So McDonald's is inflation beating with their net income growth rate. But look at this. Their dividend cost $1.21 billion. So that's pretty cool. They can afford the dividend. And what are they doing with the rest of their money? Because they have so much extra money, they're just doing stock buybacks, nearly buying back $1 billion worth of their own stock every single quarter. So not only do you have a nearly 3% dividend yield, you also now own 1.29% more of the company than you did 1 year ago, thanks to the stock buybacks. So you really have a 3 to 4% total shareholder yield on this because of the dividends and the stock buybacks. So that's what I love about McDonald's. The valuation makes sense when we look at the forward PE metric, which includes the entire next year expected EPS. So, for me, I that's why I picked up McDonald's. I only picked up 4 shares, which is nearly $1,000, but that's my starting position, and I'm willing to buy one more share of McDonald's. All right, so now I want to show you guys why I bought Disney stock, ticker symbol DIS. So we all know what Disney does, a huge entertainment company. I feel like a lot of people now, a big trend is people are spending money on memories and experiences more than stuff. I feel like that was kind of like a revenge spend ever since, the pandemic happened. But I want to show you Disney and their valuation right now. So they're trading at a forward PE ratio of 20.75. So on a forward PE metric, that's pretty fair. And they also have a dividend. The yield is super tiny, it's 0.77% dividend yield. But, at least it's something. They actually cut their dividend and just brought it back. But here's what I want to share with you guys. Here's what I want to share. So if you look at their normal EPS like this right here, it looks all over the place. It looks really stagnant. And then if we look at their free cash flow per share, this is looking a lot better. Look at the growth rate on their free cash flow per share. They used to have this one quarter every single year where it'd be, very not profitable for them, sometimes negative. But in the most recent year, look at the free cash flow per share that they're making. They're actually trading right now at 20 times the free cash flow per share, which, remember, the free cash flow per share includes, stock-based comp and all that other stuff. But I want to show you a more important metric than EPS. So look at this. Here's their EPS. It was negative in the most recent quarter. It looks all over the place, and that scares a lot of investors away. But I want to show you their diluted normalized EPS. And this is what I really like to look at. And it looks a lot better, But anyway, they're trading at 21 times their diluted normalized EPS. So that's why I actually picked up shares of Disney. And I want to show you how much free cash flow they made. So look at this. They made $3.67 billion of free cash flow in the most recent quarter. And remember that number. So $3 billion, and their dividend cost them $550 million. So they just brought back the dividend. If we scroll back down, they used to pay a dividend way back over there. But remember, so their dividend cost $500 million. What are they doing with the rest of the extra money? They actually, in the most recent quarter, bought back $1 billion worth of their own stock. So they're starting to buy back their stock at these discounted prices. So that's a really good sign as well. And if we go to their cash, they have only $6 billion of cash. That's after buying back the stock. So they have $6 billion after buying back the stock and after retiring this debt. So look at this. Their debt is actually down 4.57% from 1 year ago. And their debt is not concerning at all. Look, they have $46 billion of total debt. And remember, look at the free cash flow that they make. $3 billion. And it's not like they have a huge dividend burden. So yeah, that's kind of my thoughts on why I bought Disney stock. I really believe in the trend of people starting to spend more on memories and experiences, and the valuation on Disney makes sense. I really want to own this company long term. This is a great blue chip name that everyone knows worldwide. And that's why I picked up Disney. All right, so now let's go ahead and look at Nike stocks. So check this out. They just hit a new low today ever since their earnings down to $72.46. That's crazy. But let me show you their metrics right now. Their valuation, look at the forward PE ratio of 20.22, very similar to McDonald's and Starbucks. But look at the dividend yield. They have a 2% dividend yield. It just went over 2%, which is crazy. I've never seen Nike have a higher yield. But check this out. This is their most recent EPS. So they made 98 cents in the most recent quarter, and their dividend per one quarter cost 37 cents. So they are able to afford like 3 quarters worth of their dividend just in 1 quarter of EPS. So from an EPS point of view, their dividend is very safe. This company made $1.5 billion in the most recent quarter. That was actually up 45% year over year, but we are also comparing to a quarter where it was only $1 billion last year, which was down 28% the year before. But remember this number. They made $1.5 billion in the most recent quarter, and their dividend cost $562 million. So like I'm saying, they're easily able to afford this dividend. And what are they doing with the rest of their money? Well, Nike is spending a bunch of money on stock buybacks. Look at this. They spent $733 million on stock buybacks just in the most recent quarter. So that's pretty crazy. And, that's also unfortunate. Look at this. A year ago, they bought back $1.4 billion of stock. Well, if we scroll back out, that means they bought this, probably, well, definitely at a higher price than it is today. I kind of wish Nike would have saved that money. If they knew bad times were coming, keep that money and buy back the stock when it's lower. But I don't know if that's manipulate. I don't really know how the rules work for that, but yeah, guys, I hope you enjoyed the video and my analysis on these three stocks. Please hit the like button if you did. And if you want to help out the channel, then download the Moomoo investing app. You get 5.10% APY. No monthly fees like Robinhood. You pay $5 a month. And there's a bunch of other cool things. You get a bunch of free stocks if you use my code. I really appreciate it, but hope you guys have a great rest of your day.